Hello, this is Lerato Taidi speaking here. Hello to everyone. Hello. So today I'll be analyzing. I choose to analyze gold. So yes. So as you can see, guys, currently I'm using my phone, but I analyze the same on the laptop. The laptop on the phone is the same. So my phone is it's a quite big screen phone, so it's comfortable for me also. So let's continue to analyze. So firstly, I choose the pair gold. The strategy works on each pair gold, forex, and also cryptocurrency. So let's start. So first thing is first, what I use to analyze the market, the technicals, I use support, resistance, Fibonacci retracement, trend lines, and trend lines. So for with support and resistance, I identify the entry, the exit, and the take profit on each pair. And then with the Fibonacci acts a confluence for support and resistance, identifying also the entry and the exit, which I have use. And then on the trend line helps me to check the direction of the market. That's usually the first thing I like to do when I analyze. Apply the trend line to check where the market is actually going. If it's in a downtrend, uptrend, or the range, it's ranging, depending on the status of the market. Okay, let's continue. So the first thing I usually start with, I start analyzing on a bigger time frame. I use a bigger time frame. I use daily as my reference. Then my entry, I would use it as H1 or H4. Highly unlikely. What do I check for H1? I check if the zone is getting respected, either rejection or retesting. So those are the things I will check on my H4 after I analyze on daily. So the first thing I will start on daily, I will check the market, checking now, and then I'll apply my trend line. Take my trend line. Okay, before I apply the trend lines, I apply it. So I will check. Obviously, I will see point one here, I'll check point two, I check this thing. It has a connection between 3 points. Then I'll apply my trend line. There you go. Put my trend line. How I put my trend line, I put it to touch on the wicks of the candle. So I use the candlestick as my chart. So I use only the wicks of the candles will touch the trend lines. That's how I put it. Checking the wicks of the candle are touching there, and then I'll also check for an up trend with the trend line. Okay, touching the wicks can touch yeah, and here also the wicks can touch. Yeah, so I've seen now the wicks are touching. Firstly, oh, let me just firstly I will check. Okay, now the wicks are touching with point one, point two, and here it's almost touching at 3. And upward we touch here and touched up here, and then it went up, and then it broke the trend line. So this trend line, it was broken, and now it's retesting on the trend line here. So here also with the entry, our entry, we use it as an entry if you want. So hence I would like to say, even if you're using a Fibonacci a support and a resistance only, or using a trend line to enter, the only thing about trend line is it doesn't give me a clear exit point or a take profit. As well, that's why I'm incorporating for support and resistance for the entry and exit. So as we put it, we check there. So our data in daily tells us, even if we can go to a smaller time frame H4 to see perfectly what's been happening. Just zoom in a bit again. Just yeah, perfect. So now we are in H4 where we had that 1.1, and then we had that touch again, and then here it got broken. Oh, let me just, yeah, we had 0.1, 0.2, 0.3. After 0.3, it does your entry. So you touch 0.1, 0.2, 3, you enter. 0.3, 4, 5, you enter. And then sometimes it could be invalid. You can not even test on the line. So it depends. So we had 0.1, we had 0.1, 0.2, 0.3 up. 0.1, 0.2, 0.3, they didn't even touch, but yeah, we get the point. There is this. So I've put my trend lines. Now I'm going to the next tool that I use. I go back to the daily time frame, zoom in a bit, then I put my favorite, one of my favorite tools, which is support and resistance. There we go, put it. And then, so what you're looking for, we'll be putting it, the turning points. I won't even start there. So let's start the market 10 here point. You can see here we have a turning point here. Good. Let's go again. Have our turning point here. So now we have, you see what's, you can even clearly see what's happening on the market. The price was between $2,054 to $2,006 in the past days. There we can see, because here we give you our price and then date. So it's been in this ranging between $2,000 to $2,054 and $2,006. So you can see, and then I zoom in again. I zoom in, I'll check. I'll even try to put another support or resistance line. So this one, it got supported, went up. Here it got resistant, it went down. Yeah. So resist, it's when you get sellers, and support, you get buyers to push it up. So let's put the other one. So I'll take it, I'll see here. Either I'll put it here, up here, because here I wanted to put it here, but there it was put, but it became invalid. So hence I'm putting it up there. I'll put it up there. I see it went up and then it pushed down. So there was a resistance there, up there. Okay. After putting my resistance, I usually like to put it to an exit. So you have your correct exit. How do we put an exit? So you have your block, which I call the zone. You have your block there, block there, block there. Great. Now you have your entry can be here, your exit just above there. You have to really be careful, because sometimes you just get your entry just above the wick. Yeah, it's correct. So entry above the wick, exit just your exit there. You see that's above the wick, just up the entry here, and then you push down. There's a wick, exit there, push up, still resisting on this one. Let me just fix this. Exit there. So now you do have your entry point here. Now we have what do you call confluence. We're waiting for to see at this level $2,029. After that, I will just put my blocks just to see my yellow blocks to finish analysis. Here we go. The last one. Okay, we almost done now. So the last stage of my analysis, I will put in the Fibonacci. So I will put the Fibonacci. I will see, and on the current market now, it's busy pushing down. The previous market was pushing down. Now it's busy pushing up. There's some buyers in the market. Now let's put the Fibonacci retracement. Here we go. So since when the market is pushing up, the Fibonacci retracement you started pushing, you start up down now. So here we go. We push our Fibonacci up down. There's it. So we have our trend line Fibonacci. So you can see there now. If you can even see the Fibonacci is telling you something. Fibonacci is telling you I went up there, then I started pushing all the way down. Now I'm from zero, I'm pushing up, busy pushing up. But here, there's a zone which impossible. I might reject and push down again and continue pushing down or up. It depends. It might be reject here or break it and then reject up here. But we follow the tools. So now Fibonacci is telling you at 50 and between 50 and 61.8, that's where you get your zone, your entry and your exit level. And then also Fibonacci, yeah, I like to use it as a take profit. And what I mean is, that means if you enter here at this level, like for instance, maybe you enter this one, you know you're in the first take profit will be on 23.6, the third one will be, the second one will be on 38.2, the last one will be here. So as the same, maybe if it started to reject here, the first take profit will be here 38.2, the second one 28.6, and the last one would be here if you enter 3 position in the market, depending on your card size. After that, we're done. For entry purposes, we go to a lower time frame. Lower time frame, we're waiting for us to see clearly here on this level 50. If it rejects and start to give us a sign, we start putting in a sell. First take profit 38.2, second take profit 23.6, or it can break up, continue breaking up, and then if it breaks up, we take a buy on this 61.8 till this level here. So thank you so much. I hope you enjoy the analysis and the breakdown of the market. Thank you so much.